Question 406. In this type of listing, the seller pays a commission to the broker even if the owner sells the property himself. A. Exclusive agency listing. B. Net listing. C. Open listing. D. Exclusive right to sell listing. Correct answer is D. Exclusive right to sell listing. In a net listing, the seller agrees to accept a specific net amount from the sale of the property, and the broker retains any amount exceeding that as their commission. While legal in some states, they are often discouraged due to potential conflicts of interest. The commission payment isn't tied to who finds the buyer in the same way as an exclusive right to sell. In an open listing, the seller can hire multiple brokers simultaneously. Only the broker who actually finds a ready, willing, and able buyer earns a commission. If the seller finds the buyer themselves, no commission is owed to any of the brokers. Exclusive agency listing. In this type of listing, the seller hires one broker exclusively, but retains the right to sell the property themselves without paying a commission to the broker. The broker only gets a commission if they or another agent, not the seller, finds the buyer. Exclusive right to sell listing. The seller hires one broker to exclusively market and sell the property for a specified period. Crucially, the broker is entitled to a commission regardless of who actually finds the buyer, even if the seller finds the buyer themselves. This provides the broker with the most security and incentive to market the property aggressively. Question 407. Under the UCC, in contracts for the sale of goods, the test for deciding whether a buyer has the right to specific performance is if the items being sold are A. Expensive. B. Readily available. C. Unique. D. Both A and C. Correct answer is C. Unique. Specific performance is a legal remedy where a court orders the breaching party to fulfill the terms of the contract, rather than simply paying monetary damages. It's typically granted when the subject matter of the contract is unique and cannot be easily replaced with a similar item on the open market. UCC Section 2716 addresses the buyer's right to specific performance. It states that specific performance may be decreed if the goods are unique or in other proper circumstances. This could include things like custom-made items, rare collectibles, or goods with special sentimental value. Question 408. The following are ways that staging is used to improve the desirability of a home being shown to potential buyers, except A. Removing clutter. B. Replacing window shades. C. Upgrading earthquake insurance. D. Eliminating food odors. Correct answer is C. Upgrading earthquake insurance. Staging is the process of preparing a home for sale by making it more attractive to potential buyers. The goal is to showcase the home's best features and create a positive first impression. This typically involves cosmetic and aesthetic improvements. Earthquake insurance is a financial protection against potential damage from earthquakes. While it's a valuable consideration for homeowners in earthquake-prone areas like San Jose, California, it's not a visual or cosmetic improvement that directly impacts the desirability of the home during a showing. It's related to risk management and financial planning, not staging. Question 409. A potential borrower trying to obtain a FHA loan would apply to A. A broker. B. The FHA. C. An approved lender. D. The VA, if the borrower is a veteran. Correct answer is C. An approved lender. The Federal Housing Administration, FHA, doesn't directly lend money. The FHA is a government agency that insures mortgages, not a lender itself. Approved lenders process FHA loans. Borrowers must apply for FHA loans through lenders approved by the FHA to participate in the program. These lenders can be banks, mortgage companies, or credit unions. Brokers can connect borrowers with lenders. While brokers can't directly issue FHA loans, They can work with borrowers to find an FHA-approved lender that meets their needs. Question 410. Bart, an owner of beachfront property, is aware that the paved pathway to the beach being constructed over the course of a year by Jared, who lives across the street, is an encroachment on Bart's property. Nevertheless, Bart waits until the pathway is completed before notifying Jared that Bart is suing to have the pathway removed. Jared can likely prevent this result by relying on the grounds of A. Laches, B. the statute of limitations, C. the statute of frauds, D. Coastal Commission regulations. Correct answer is A. Laches. Laches is an equitable doctrine that prevents a party from asserting a right or claim when there has been an unreasonable delay in doing so, and that delay has prejudiced the opposing party. In this scenario, Bart knew for a year that Jared was encroaching on his property by building the pathway. However, Bart waited until the entire pathway was completed, causing significant expense and effort for Jared, before taking any legal action. This unreasonable delay, coupled with the prejudice suffered by Jared due to the completed construction, makes the defense of Laches likely to succeed. The statute of limitations sets a time limit for filing certain types of lawsuits. While there is a statute of limitations for actions related to real property, the key issue here isn't necessarily the length of time that has passed since the encroachment began, but rather Bart's knowing and unreasonable delay in acting while Jared incurred significant costs. Laches can apply even if the statutory period hasn't fully run. The statute of frauds requires certain types of contracts, like those involving the transfer of real property, to be in writing to be enforceable. This doesn't directly apply to a situation involving an encroachment and a delay in legal action. Coastal Commission regulations pertain to development and land use within the coastal zone. While they might be relevant to the legality of the pathway itself, they don't directly address Bart's delay in bringing a legal action for encroachment. In summary, Jared's best defense against Bart's lawsuit for removal of the completed pathway is likely the doctrine of Laches. Based on Bart's unreasonable delay in asserting his rights while Jared detrimentally relied on Bart's inaction. Question 411. The appraisal method usually relied upon by real estate professionals is the A. Cost approach, B. Capitalization approach, C. Market approach, D. Sales replacement. Correct answer is C. Market approach. The market approach estimates the value of a property by comparing it to recent sales of similar properties in the same or comparable areas. This valuation method is preferred as it directly mirrors the present attitudes and behaviors of buyers and sellers in the market. Consequently, it serves as a reliable indicator of fair market value for standard residential sales when ample comparable data exists. Appraisers analyze these comparable sales, making adjustments for differences in features, condition, location, and time of sale to arrive at an estimated value for the subject property. The cost approach, valuing based on rebuilding costs, suits new construction and unique properties. The capitalization approach, based on income generation, applies to investment properties. The market approach's reliance on comparable sales makes it the most relevant for typical home transactions. The market approach is the primary valuation method for residential real estate because it directly reflects current buyer and seller actions. Its direct link to market activity provides a strong indicator of fair market value. Question 412. Harry makes a written offer to purchase real property, but before learning whether the seller accepted it, Harry is killed in a car accident. What effect does Harry's death have on the offer? A. Once the administrator of Harry's estate is notified of the seller's acceptance, the contract is binding on the estate. B. Regardless of the timing of notification, the offer and its acceptance create a valid contract. C. Harry's death served to revoke the offer. D. If the car accident resulting in Harry's death occurred after the offer was accepted, it is binding on the estate. Correct answer is C. Harry's death served to revoke the offer. In contract law, the death of the offerer, the person making the offer, generally terminates the offer, even if the offeree, the seller, is unaware of the death. An offer requires a living offerer and offeree capable of entering into a contract. Notification to the administrator after death cannot retroactively create a contract. If acceptance occurred before Harry's death, then a valid contract would have been formed, and it would generally be binding on his estate. However, the scenario presented states that Harry died before learning of acceptance. Question 413. A developer who wishes to sell subdivided lots from his subdivision located in the middle of a city must first: A. Provide buyers with a copy of the Real Estate Commissioner's final report on the subdivision. B. Obtain a signature from the buyer verifying his receipt of the report. C. Provide the city with his financial statements dating back 10 years. D. Both A and B. Correct answer is D. Both A and B. The Subdivided Lands Law requires, among other things, that the Commissioner's report be furnished to customers, with their signatures verifying receipt. This report, also known as a public report, discloses vital information about the subdivision for potential buyers. It includes details like developer information, infrastructure details, roads, utilities, financial arrangements for improvements, homeowners association information, if applicable, potential assessments or fees. These requirements help protect consumers by ensuring they have access to crucial information before entering into a purchase agreement for a lot in the subdivision. The law does not apply to subdivisions located in a city if the subdivision has no common area, nor does it apply to subdivisions located in unincorporated areas. Question 414. While working with a subdivided property for which the Commissioner's preliminary public report has been issued, a real estate agent can: A. Accept a listing for the property. B. Accept a purchase offer and take a deposit. C. Lease the property without selling it. D. Accept an exclusive listing without a termination date since it is uncertain how much time will be needed to sell all the lots. Correct answer is A. Accept a listing for the property. Preliminary Public Report, PPR, allows a subdivider to begin marketing and taking reservations for lots within a subdivision before the final public report, FPR, is issued. However, there are restrictions on what actions can be taken. Real estate agent can generally accept a listing for a property within a subdivision that has a PPR. This allows the agent to prepare for the eventual sale of the lots once the FPR is issued. Agents and subdividers can accept refundable reservation fees before the final public report is issued. However, they are prohibited from entering into binding purchase agreements or accepting non-refundable deposits until the buyer has received and had a chance to review this report. Leasing the property might be permissible depending on the specific circumstances and any conditions outlined in the PPR, but it's not the primary activity facilitated by a PPR. California law requires all exclusive listings to have a definite termination date. This applies regardless of whether the property is part of a subdivision with a PPR or a fully approved development. An open-ended listing is illegal. Question 415. If a real estate agent commits an act violating the real estate law, the real estate commissioner can discipline the agent for the violation up until: A. The agent moves to another state. B. 3 years after the violation. C. The agent's license expires. D. Never. There is no time limit on the commissioner meting out discipline for a wrongful act. Correct answer is B. 3 years after the violation. California law sets a statute of limitations for the Real Estate Commissioner to initiate disciplinary actions against a licensee for violations of the real estate law. This period is generally 3 years from the date the Commissioner becomes aware of the violation. The Commissioner's disciplinary authority is tied to the agent's California real estate license, regardless of their residency. Even if an agent's license expires, the Commissioner can still take disciplinary action for violations that occurred while the license was active, as long as it's within the statute of limitations. The standard period in California is 3 years from the Commissioner's awareness of the violation.